Okay, folks, sorry I'm late. I just ate these jalapeno chips. They're really hot. And wow, took me by surprise. Good chips, though. All right. We have a lot to go over. I think that since we last met, which was Sunday night, and in particular since we met last Thursday night, I have become exponentially more bearish on this market, in particular technology. Now, I'm torn between as to whether or not this is a sector rotation event or is it going to be a broad-based sell-off in equities. There are arguments to be made for each side. We'll talk about them. I'll talk to you about some ratio charts later on and a trade that we spoke about on best stock charts for the new trading week that we put on this past week. We're going to talk about that stock as well as the sector that it's in and how it's performing relative to the S&P 500. So before we begin, let's do a smash, like, subscribe. You know the deal. Please do that for me for the YouTube algorithm because, I don't know, they don't like me too much. So let's say hello to folks. Franklin, welcome, my man. Okay, so let's begin with Bob Dylan at Louisville Palace, March 23rd and 24th. See you there, everybody. It sounds good. So, Talon, was the members area where you input the quotes that's not working? Because Wendy sent me something as well. So I got to get my developer on that if there's an issue. So please let me know. Okay. So, and yes, members, if you can't enter the symbols that you want me to review in the members area, go to the Slack forum. I'll pull it up. Use the stock market observations tab, and we'll just keep them consolidated there if you could. Okay. Let's get to it. Let's talk about Adobe. Adobe reported earnings. Hold on. I want to see this. Bob, I was good to put it. Oh, good. Okay. All right. I think there's a timeout issue there, but I don't remember seeing Wendy have quotes in there the other day. Like there's a limitation. I don't like that. I never asked for that. That was the developer that did that. So I'm going to have that removed. KM Productions, Google, Microsoft, all up today. Some hit. Yeah, well, we're going to talk about not necessarily Chipotle. We'll talk about Google. We'll talk about Microsoft. Apple was up as well today. It's all smoke and mirrors. It's all smoke and mirrors because you're having a bit of sector rotation out there. And I'll show you on the charts what I'm referencing in a moment because it's a game of shenanigans that's going on. Sean, hey brother. Okay, let's talk about Adobe. Adobe reported good numbers for the quarter. And then I took a look at their report and they announced a buyback. And whenever I see a buyback on an earnings report, that always gets my antenna up. I always worry that they're probably not going to do well looking forward. And sure enough, their forward-looking guidance is not looking good. So they beat on the bottom line. They beat on the top line for the past quarter. Forward-looking, not looking so good. So what do companies do when they report a soft forward-looking guidance? They come out and they report buybacks. They don't have to do it. By law, they don't have to do it. They announce it. They never have to follow through. I'm not saying that that's what they're going to do, but it's just to prevent some damage to the share price. And I think that Adobe is going to go lower. I mean, this is a lot of damage here to the stock after hours. And even with a share buyback, it's $25 billion in stock they're looking to buy back. The market maker anticipated move was around $40. It closed at $570. Last tick was $514. So put sellers were annihilated today. Absolutely annihilated. I did not trade this one. I've been avoiding these earnings trades. So Adobe, not looking good. This is probably going to press lower. And in the after hours session, you're seeing equities get a little bit of follow through to the downside. I mean, Super Micro, of which we have a ton of options expiring tomorrow. We're option sellers. That's good for us. They're expiring tomorrow, but we're down in the after-hours session. We're off the lows. We're down more than this. We're down that current about $6. We were down about $15 earlier. All right, I got to block this guy. Okay. All right. So we're seeing some weakness. Let's check out the NASDAQ futures. Look at the NQ. NQ is down fractionally, not much. Adobe's not a big market player, but it's the trend. It's the trend that is not good. Let's check out the E-minis. They're down as well, fractionally. They're flat. They're flat. Okay. So that is the Adobe earnings. Let's talk about economic data this past week. And today was really a bombshell of economic data that came out. And I personally think that the markets have it wrong. That's a bold statement, I know. And when I mean the markets, I do not mean the equity markets. I think that the equity markets should have gone down today as they did. What I think they have it wrong is with the US dollar. I'm going to go to the chart of the US dollar, the weekly charts in a moment. We're going to talk about it more in great detail. But a lot of money went rotating into the US dollar today out of equities. And gold took it on the chin. All the precious metal names took it on the chin. I think that's going to be short-lived. Now, the caveat is that with the gold mining stocks, in particular gold mining stocks, not gold, not silver, but the mining stocks, is that if equities drop, they will drop as well. Again, if equities drop, the S&P 500, Russell 2000, et cetera, if it drops, in all probability, if the dollar rises or maintains current support, those stocks are going to decline as well. Why? Simple. They're stocks. They're going to go down with the broader market. You will have margin calls if the selling gets too ruthless on the S&P 500, and margin calls beget selling of anything to get liquidity. So everything gets impacted. No matter what you're trading, it's going to get impacted. Gold to get impacted slightly, but not as great as to what's going to happen with the gold stocks. So be careful here of what we believe to be a safe haven in the equity asset arena. I mean, today I booked profits in LABU. It's a biotech leveraged ETF, made profits, raised some capital. We are by and large short this market now, in particular the triple Qs. We'll talk about that more in a little bit. Now, to the economic data this week, NFIB, that's a small business optimism, missed. CPI came in at par, at the core, a little bit hotter. So inflation, folks, this is inflation at the consumer level. And the markets went up on this. They went up. And then we had a nothing day yesterday. And I said, okay, on Tuesday night, I said, one of two things is going to happen here for Wednesday. One, they're going to take the market up on no news. It'll be computerized buying on light volume, or it's going to be a sideways day, a really do nothing day. And that's pretty much what happened yesterday in anticipation of today's economic data. Then we got the news. I'll go into greater detail in a moment, but retail sales missed. Producer price index, hotter, much hotter than expected at the headline. At the core, much hotter than expected. So this was just bad. This is just bad economic data. So I don't expect. I didn't even trade back in the 70s, so I don't want to pretend I did. But I have studied uh, the gold markets, inflation. I have studied it for years and years and years, and this is classic textbook stagflation. And gold was telling you this last week when it was breaking out. So what's stagflation? It's stagnant growth with inflation. Now, you may be saying, well, Bob, the Federal Reserve, they're pushing back their rate cuts. They were going to do it in March. They punted. They were going to do it in May. They punted. Looks like June is a little bit iffy right now. It doesn't matter. It doesn't matter. What the gold market is telling everyone that will listen is that it doesn't matter what the Federal Reserve is doing or won't do. It's not enough to fight inflation. The gold market is saying the dollar needs to be lower and the interest rates, the prime rate needs to be higher, much higher to get inflation down. But the Federal Reserve ain't going to do that. And the gold market knows it. Moving on. We'll talk more about that in a moment. Shiller PE ratio. We are at 34.44, a little bit of nosebleed levels here. We have been higher, but you can't expect a lot more out of this market right now. Not unless the Federal Reserve comes out and says, listen, we're going in June. We're going to cut rates. It's going to happen. Then you're going to see equities rip up higher. They're probably not going to do that. They want time to continue to roll off debt off their balance sheet because they know it's coming. Armageddon is coming. It's only a matter of when. And you may be saying, wait a minute, you've been bullish on the market. Yeah, I have been. Short term, intermediate term, until such time as we get the what? The signals. What are the signals that this market is in a lot of trouble? Couple of things. In particular, yield curve moving up higher, steepening. We'll talk about that more in a moment. Bond yields moving up higher. We'll talk about that in a moment. U.S. dollar. If we see bonds and the U.S. dollar plunging together, that's it. That's it. If the dollar and bonds are tanking, what the world is saying about the United States is that we have no faith in you anymore. We don't get you and where you want to go because we don't want to go along with you. So our politicians, what are they doing? They're putting our faith, the full faith and credit of our future into the hands of the international order. And at some point in time, we're going to get a bill. And that bill is going to come vis-a-vis skyrocketing yields, dropping dollar, dropping bond prices. And that will not be good. Because what's going to have to happen is that the Federal Reserve right now is paying interest on the debt equivalent to, if not in excess of, the defense budget. Where are they going to get that money if they can't go to the international debt markets and raise it at a reasonable rate? They got to raise taxes, and they got to raise taxes big. They're coming for us. We are next. Why do you think Bitcoin is surging? It's not US dollar denominated. Gold, why is that surging? You could bury it in your backyard 100 years from now. Unless somebody finds it, it's going to be in your backyard, just as the day it was 100 years ago. Federal Reserve's balance sheet. Their balance sheet actually expanded last week. So not by much, very, very slight amount, not really even worth talking about. The Fed liquidity facility. This is the facility that the regional banks, the banks were down today. The regional banks have been on a lifeline for now a year, exactly a year. This makes sense. And the only reason why you haven't heard about the regional banks in a year is because the Federal Reserve instituted a program to provide a lifeline, life support to these banks. That has since expired, effective, I believe it was Monday. So here you have it. Fed liquidity is facilitating markets inflation fantasy. The market continues to anticipate a benign inflation outcome, but price growth is becoming ingrained and the CPI is poised to begin rising again. Still, markets are able to ignore the inflation elephant in the room for now as the central bank reserve base liquidity keeps rising despite ongoing quantitative tightening. This is quantitative tightening here. The reduction of the Federal Reserve's balance sheet. We're nowhere near where we were pre-COVID, nowhere near it. Inflation is becoming like a guest at a dinner party who just won't leave. Tuesday's data shows that it is getting at least one more drink and may yet to try to stay the night. The market's attitude, however, is becoming one of avoidance. If you ignore inflation, hopefully it will go away. That is the attitude of the market. The attitude of the market has been, as long as we get no expectations for, here's where we're at current. This is the Federal Reserve Fed Watch tool. As long as there's no column to the right here suggesting that there is going to be an increase in yields. Here's June. We're here at current. Somebody out there is pricing in the hike. Oh, no, that's no change. Why do they have? Yeah, that's right. Okay. This is where we're at current. No expectation for a rate hike. July, no expectation for a rate hike. So as far as the eye could see, no expectation for a rate hike, despite the fact this goes out to September of 2025, despite the fact that CPI came in much hotter than expected, PPI came in much hotter than expected. Producer prices surged again in February as energy costs reaccelerated. Remember, it's about a month ago now, we were talking about gasoline prices. Gasoline prices had in one day or 1 week was a 19% move. And I said, at some point in time, this is going to show up in the CPI data. We're watching it now. We are doing our own CPI channel check a month in advance of when the CPI is coming out. Here, let's bring up gasoline prices. This is why we do what we do here, and that is to constantly focus in on what's going on in the commodities market that could drive prices up higher. Now, here's the rub. Here's the rub. This is gasoline prices weekly chart. So what PPI and CPI factored in was this move here, the week of February the 5th. Guess what they haven't factored in yet? This week in particular, because we gave some of the prior week back, all of it back. So far on the week, we're up another nearly 7% on gasoline prices. So is it any wonder why you're seeing sector rotation out of high tech and into other areas of which we were buying? Remember, going back to stock charts for the new trading week, I mentioned we didn't have any technology stock. I think we had ProLogix on there. I don't even know what sector they're in, but I think they're a technology stock. Fact check me on that. I'm not saying they're not, but for the most part, we really didn't have any technology exposure. What did we have exposure to? Cyclicals, cyclical names. And we're going to go to a chart of that in a moment of what we bought and the sector and how it's doing relative to the S&P 500. So we have inflation, which is rising yet again. And I'm going to go back to I'm going to go back to what I said earlier. Stagflation, 1970s style stagflation, stagnant growth with inflation. So we have growth, right? We have the government spending its way to GDP expansion. So for every billion that they get about 100 million in GDP. But what do they care? That's just, it's not their money. They're making money in the stock market. They're good. But our money is going out the window to create more GDP. And it's not dollar for dollar. It's not as if we're investing, meaning the government is spending $1 to even get $1. God forbid they would have spent $1 to get $2 back in revenues. No, they're spending $10 to get $1 in GDP. That's our government at work. So how is stagflation represented in today's economic data? Look no further than real retail sales tumbled the second month in February. Now, this is just bizarre, and it'll actually reinforce what I just said earlier. Bank of America forecast and Bloomberg consensus for February Census Bureau retail sales data. So here was their consensus, and the reality is we got about half the growth as expected on retail sales. So this is classic. The consumer is dead. I mean, here, we'll come back to this in a moment. Here, credit card default rate for small lenders have just hit a new record high at 7.8%. These levels have never been seen since 1991. 1991, that was the recession, that was the S&L crisis then. And you are here, folks. We are here. Kumbaya. Insanity. So we got jobless claims out today, and the jobless claims, finally the media, so-called media, is waking up. And here is the initial jobless claims came in a little bit worse than what was expected. So somebody did the analysis here. Here's jobless claims. Jobless claims data goes from sublime to the ridiculous. As a reminder, in the real world market, 2024 has been a poop show for layoffs. Here's all the layoffs so far. And all you've had are benign jobless claims. Why? The government is hiring. If you're looking for a waiter job or a bartender job, they're hiring. They're good. If you're looking to become a social worker, remember, these are all jobs that were in the last jobs report, the non-farm payrolls. If you're a social worker, there's plenty of opportunity out there for you. You don't produce anything, not to knock people for their job. You don't produce anything. The however is you're keeping the non-farm payrolls up and not stuck in the mud. They'll revise down that number that came out so hot last week, next month. But next month's headline report for this month is going to be mind-bogglingly good. But that's the government at work for you. So here's the rub. How is it possible, may you ask? Oh, here we go. I kind of skipped this. The number of Americans filing for jobless benefits for the first time last week dropped to 209,000, with the NSA number tumbling to 200,000. I'm not sure what that is. How is it possible, you may ask? Well, let us show you the way. New York State, my home state, claims that its jobless benefit rolls collapsed last week. New York accounted for 99.75% of the weekly change in initial jobless claims across the entire country. Here, jobless claims. I mean, you can't make this up. It's like we live in the Soviet Union when they used to put out those crazy reports of their economy. It's like we're living that dynamic now. So moving on here, uh, let's talk a little bit now about the markets, because I've been waiting for this and it's finally happening. AI hype is finally being seen for what it is, a lot of hype. So behind the scenes, Amazon and Google quietly lower expectations for generative AI as hype cycle fades. And this is a zero hedge poll off of X. I didn't mean to do that. Have you used Grok, ChatGPT, Gemini, or any other chat box in the past week? By and large, no. So even with Adobe, in an effort to try to prevent their stock from getting pummeled, what did they do? Of course, they had to throw out AI demand continues, right? They got to get that into the headline. The algorithms scrape that and they begin buying the stock. This time it did not work. Adobe is in a lot of trouble. So let's talk more now about the equity markets themselves. And somebody pointed out earlier here, K-Man Productions, Google, Microsoft were up today. And these are, I believe CMG is in the, and Visa maybe as well in the NASDAQ 100. Correct me if I'm wrong on that, but I believe that they are. So what's going on here is that I have an illustration. I'll show you what I mean. I'm going to make a prediction, okay? Even though we closed down today and Adobe missed, and we're probably going to get a down market tomorrow, my prediction is Netflix is going to rally. Netflix is going to rally. No, it's not going to rally simply because I have an iron condor on there and it'll pressure my calls. No, that's not the reason. That's just fate. The reason is that they're taking turns. They are noticing, when I say they, the powers that be, the whales on Wall Street who are not ready to see this market drop yet, the powers that be who are not net short the market. You will know when they are net short the market, when the market begins to go into free fall. So take note of NVIDIA. NVIDIA's price action. To be fair, we need to go to a weekly chart of NVIDIA. RSI remains at 89.46. Back to the daily chart. And note, we have not put in a new weekly higher high. Back to the daily chart. Daily chart bearish, key reversal, bearish engulfing, call it cupcakes. It's one of my top 5 favorite candlestick patterns. Link below, free 5-part video tutorial, my top 5 favorite candlestick patterns. We are beginning to roll over. We are holding at current 876. If that breaks, we're probably coming down. They have a while to go before earnings, maybe down to 750 on NVIDIA. So with NVIDIA is the stock that's been keeping the triple Qs up and not falling. Well, what do? Well, what you do is you go get your names that most heavily are weighted in the triple Qs. What are those names? Oh, let's take a look. Microsoft, I believe, is either number 2, and that was up today, nearly 2.5%. No news. It was just up. And this is one of our top picks a couple of weeks ago for a squeeze. So this is not entirely unexpected. The other name that was out there today that was up was Apple. Apple was up over 1%. So the fact that you had Microsoft and Apple up kept the triple Qs from falling apart. If these two names were down today with the rest of the market and NVIDIA, it would have been a bloodbath. So why do I say that Netflix is next to run? Simple. Let's pull back to a 4-hour chart. In orange, you have your Bollinger Bands. In beige, taupe, and off-white, perhaps even eggshell color, you have your Keltner channels. And right here, you saw a lot of compression build up, energy build up, and it has now begun to release. So I think that Netflix is going to break out tomorrow. Equity markets could be down tomorrow, but as sure as God made green little apples, Netflix is going to be up. They're going to make sure it's up because there's always a bull market somewhere, right? That's what Kramer always likes to say. So they got to keep this going. They got to switch. The game of musical chairs has too few players in there now that are keeping the market up higher. Netflix can't do it on its own. It's even more difficult for Microsoft to do it on its own. They had to get Apple going today. So if NVIDIA goes and Microsoft goes along with Apple, which looks like it is going to go, look out below. So my prediction, Netflix tomorrow, latest on Monday, up. Spending a little bit more time here about why I think that we're going to get, at a bare minimum, this is least case, this is best case scenario, sector rotation. Sector rotation into producers. What produces what we utilize in our lives? Energy, farm equipment, things like that. Because take one look at cocoa prices. I have a better chart. Chart of the day, cocoa rally. This is from a few days ago, too. It's still up. Cocoa prices have hit a fresh record high, fast approaching the once unthinkable 7,500 per ton level. At current levels, we will soon see widespread retail price increases for all kinds of chocolate. Happy Easter, everyone. And here's the chart of cocoa prices. Cocoa prices are up 67% on the year so far. Let's do a ratio chart for some perspective. NVDA. You would have been better off this year investing in cocoa rather than NVIDIA because it's outproduced or outpaced NVIDIA by nearly 15.25%. Let's take a look at Meta, another big player out there who did very well so far this year. Cocoa is outperforming Meta by 19 percentage points. Copper, left for dead, is now beginning to break out. This is a sign of global expansion, not contraction, expansion. It may not be here in the United States, but it's a sign of expansion. Dow Jones Mining Index, bullish key reversal on a monthly chart. This wants to go higher. Let's do a ratio chart relative to the S&P 500. It is outperforming the S&P 500 by nearly 9 percentage points in 1 month. The CRB, this is the Reuters CR Commodities Index. Weekly chart up over 2.25%. We've spoken about this before. This goes back weeks ago now. I said this is a cup with handle formation. We're getting ready for the breakout. We have now broken out on a weekly time frame. Folks, this is the very essence of what is inflation. If you want to know why gold is breaking out, silver's breaking out, Bitcoin's breaking out, this is the chart for you. This is all you got to look at. Also, Energy. This is a ratio chart of energy relative to the S&P 500. On the week, energy is up nearly 3% better than the S&P 500. And it looks like it wants to go higher. Triple Qs versus the S&P 500. Do you know that the triple Qs monthly time frame peaked out back here in October of last year on a relative basis? Since then, at best, they're on par. And in real time, the triple Qs are underperforming the S&P 500. It makes sense, though. You're seeing money leave technology and move into production, cyclicals, and the oil stocks. I mean, let's go back for a moment. This is broad base. I mean, XLE is an all-in look at energy. Let's take a look at the OIH. This is oil services. Look at this breakout. On the week, up 3.5% better than the S&P 500. We bought Apache. This is one of our top 5 stocks for the new trading week. We bought it earlier in the week, and that's outperforming the S&P 500 by nearly 4.75%. So this is where money is going. Not NVIDIA, still Microsoft, but I think that these are going to be short-lived rallies, and they're probably going to fade pretty quickly. Let's go to comments, see what people have to say. Agree, disagree? Oh, really? Jeff, let's bring that up. Remember that Bitcoin is a risk asset, and it's going to trade with risk assets. Gold will not. Yeah, a little bit of topping action here. Okay. Thanks, Jeff. Jody, the lovely Jody, welcome. Hello, kind sir. Thank you. What are your thoughts on NVIDIA and Tesla? I think NVIDIA is overbought, hype stock, and it's probably pooping out. Tesla, they're probably going to rally it in a couple of days or so. Right now, I think it's dead money. I think EV, I've always said EV is a hype, a farce, and I think that is now coming out. I think Tesla longer term is in a lot of trouble. Old guests who won't leave. Yeah, the guy that had a ban. Shouldn't SoFi rebound after raising so much? Kathy Woods. Kathy Woods' investments really, they're not that good. So Kathy has a tendency to buy very, very high. She's not very technical in nature at all. So by virtue of the fact of her putting in that money, I mean, she bought Tesla, 2 months ago, a whole bunch of it. Here's Tesla. Here's Tesla. Crushed. Down 4% on the year. Down 34% on the year. Relative to, this is going to be a mind boggler here, versus the S&P 500. Oh, Jesus Christ. Down 39.64% relative to the S&P 500. That is a poop show. So SoFi, they reported good numbers. I don't know why they backed away from crypto. I think that was a mistake. It cost me a lot of money. I had my account with them, and they forced me to sell my crypto at $47,000 on Bitcoin. So I really lost a lot of money with them. I did not want to sell. What does it mean for the markets? What does what mean for the markets, Michael? You got to be a little bit more specific. SoFi has zero to do with the markets. It's a non-player. Hey, TZ Burton. Bob, do you think Apple will keep going higher? No, I do not. They may keep the show going a little while longer, but I do not think they're going to keep it going. Why has PBR been down since this is oil? That's Petrobras. I don't know, to answer your question, to be frank with you. There's something wrong with the company. I mean, this stock should be in fuego, uh, but it's not. I don't know. You'll need to do a little bit more due diligence there on that. It seems to be company specific. Uh, Hello to you, sir. Hi, Bob. Do you like FCX to play? I love FCX. I'm thinking about swapping out of BHP and going into FCX. We'll take a look at it in a little while. Trader Isaac. As a matter of fact, I got to get my handy dandy notepad out because I want to go over the weekly charts of the averages. FCX. I mean, I don't know what the heck is going on with BHP Billiton. I have $5,000. Should I invest in the S&P 500? That would not be a question that would be a good question for me to answer. I do not know you. I do not know your circumstances. So it would be a very, very irresponsible thing for me to do to answer that question. If you don't have 6 months worth of living expenses saved up, or if you have any type of high yield debt, I would think that that would be the first place you want to look to either build up the living expenses for an emergency or pay down that debt, because that's a guaranteed 20% investment before you do anything with the S&P 500. But consult a financial advisor, please. Okay, with regard to this morning's numbers, let me go back to your question. I think at a bare minimum, Michael, I think it's the title of today's video or live stream is that I think it's going to be at a bare minimum sector rotation. And I'll tell you why. Let's cut to the chase here. I'll tell you why. Because when you look, we're going to go to the weekly charts of the major averages. Now, this chart here is a major, major problem for the equity markets, in particular, small caps, high-tech beta. Those two areas are highly vulnerable to this chart here. If there's anywhere I do not want to put new capital to work, that is in high-tech beta meaning volatility, and or small caps. I was bullish on small caps. Perhaps I will be bullish on small caps if yields correct. If yields do not correct, no way, small caps. So on the week, this is the 10-year yield weekly chart. Yields are up over 5% in 1 week. Not only that, we had threatened to break down back here. I should say break out back here the week of February the 12th. We didn't. We pulled back, and now we have since broken back out of this wedge formation. If we see a close above, let's say 4.5, we get a 4.5 handle on the 10-year yield, that's going to be a problem because that's a launching pad to send this up to the highs of last year, and that would be at 5% on the 10-year. Historically, reasonable, very reasonable. But we're not in historic times. This is not your old America. This is $34 trillion and rising in deficit spending, and forget about entitlement spending. This is not America of 20 years ago when this would have been considered a low interest rate. Now, We can't afford it. Let's take a look what happened today on the daily chart. Daily chart, Bob. Well, here, you know what? Before I leave this chart, we're about halfway through the month. And take a look at this. We had that nosebleed rally, which ended in October of this year. And we pulled back. Consolidated. Now we're threatening a new breakout on the 10-year yield monthly chart. Let's go to the daily view. Let's see if this has got legs. It's got legs, friends. It's time to take the old crayon out and do some drawing. And so why is this a problem for high-tech beta? Simple. For companies to go out into the markets and to borrow, to expand their operations, to invest in their businesses, they're going to pay more in interest rates now. And what happens when you pay more in interest rates? Well, you got to increase your prices. What if your customer can't afford it and it hurts demand? Well, and you can't raise prices. Well, then that means that your EPS has got to shrink. So as this goes up, if you do not have pricing power, your earnings per share shrinks. Guess what happens if that happens in mass? That means that the PE multiple of the entire S&P 500, the entire Wilshire 5000, if they don't have the pricing power, and as we see with the consumer, their credit card debt and now their defaults and delinquencies, they can't afford it. So if they can't push prices up higher, stocks become more expensive because their earnings per share are now being squeezed. They could still have the same revenue, but their earnings per share, their margins are getting squeezed. So this is a very bullish chart. I'm not going to be the least bit surprised, though, to see a pullback and a retest and then perhaps a breakout. Bitcoin we went over already. Here is the 10-year treasury, a 20-year treasury bond, the TLT, outside reversal bar. Not looking good. It's in trouble. If this goes down, yields go up. Daily view. The hell is this? I have no idea what that was. That was the outside daily chart. Weekly chart. What the hell is going on here? Daily chart and weekly chart look exactly the same. Tips. Treasury inflation securities. All right, so here's what's happening. If you want to know why gold is pulling back, if you want to know why tips are pulling back, Treasury inflation protected securities, it's simple. We had retail sales come out today. They missed. Normally, equities would rally on that. The problem is that PPI was hot, CPI was hot, and the focus is on inflation. The focus is on inflation. So where did money go? Money went into places where they think that the Federal Reserve is going to be helpful in terms of fighting inflation. Went into the dollar. That's going to benefit if the Federal Reserve hikes rates. If the Federal Reserve hikes rates, well, then yields are going to go up, bonds are going to go down. And we saw that. So that was the move today, the knee-jerk reaction of the markets. I think it was wrong because I showed you already that the Federal Reserve has no intention going out until 2025 at current of raising interest rates. So if they're not going to raise interest rates, that means they're going to let inflation run hot. So for all the people that are selling tips now, I think they're going to regret it. For all the people that are selling gold now, because I bought call options today on gold at right when they were killing it, they're going to regret it because at some point in time, the market's going to wake up and they're going to say, wait a minute, hold on. The Federal Reserve has no intention of cutting rates. Excuse me, of raising rates, but they need to. So what's that going to do for the dollar? Dollar's going to decline. What's it going to do for gold? It's going to go up. But at this snapshot in time, the dollar is going up. Most of these gains came today. This is a very, very bullish chart. I do not think it was worthy of this move up. Volume was not that great today. It was below average. I think that it could continue up higher for a couple of more days. I think that ultimately this is going to get resolved to the downside on the US dollar. The opportunity right now for the physical metal, silver and gold, I would be buyers of those names. I would take a step back from the gold mining stocks right now to see whether or not this market has legs. Will we see sector rotation, or is everything just going to fall apart? We don't know that yet. We're not that smart. All we're looking for are clues, right? The 10-year yield rallying right now is not good for high-tech beta. It is not good for small caps. Let's take a look at the indexes. Volatility. This is a weekly chart. Rally back off the lows of the week. Still down on the week. Daily view. Up on the week, but it faded off the highs. Not a real, up on the day. Up on the day. Not a really wonderful day, though. Dow Transports. This is a sector that simply can't get out of its own way. The chart here, I want to buy it on a breakout, hand over fist. And I think ultimately I will be buying it, but right here, right now, it's very weak. And if you go to a daily chart of the Dow Transports, this 15,800 mark has been a very porous support level and/or / resistance level. We just can't seem to hold it in either direction. Therefore, what does that mean we need to do? We need to pull back and then take another running start at it. I think that what's happening here, and I want to actually bring this up on my Bollinger Band squeeze chart. I think we're setting up for a massive squeeze on the transports. Monthly chart. Yeah, we are. All right, so take note of what we have here on the Dow Transports. I'm leaning more towards sector rotation and a correction in the triple Qs. I'm becoming more and more sold on that because that's just what seems to be working out. Dow Transports, forget about today. We're not thinking about today. What we're looking for is a sector getting thrown out like the baby with the bathwater, right? And usually when that happens, that's the sell-off right before the rally. You see this all the time on Bollinger Band squeezes, right? So what's a Bollinger Band squeeze? Here you have the Bollinger Bands. It's your typical 2 standard deviation Bollinger Bands, normal ones you get out of your box, nothing modified. In gray, you have your Keltner, not modified, your typical standard formula. Inside, you have, inside of the Keltner channels, you have your Bollinger Bands. Typically, that's not supposed to be. So what this is it's showing us is that we have a lot of energy being built up in the Dow Transports. And this energy is set to be released. So I would not go shorting the Dow Transports. I don't care how down it was today. Do not go shorting the Dow Transports. Weekly view. Let me get those off. They're hiding. Yeah, so it's setting up for another squeeze. Here was the last one. Back here, nice rally that it failed. I think we're setting up yet again. Probably not this week, maybe not next week, but perhaps the week thereafter. You need to keep an open mind and watch the setup here. This is a beautiful consolidation. And at some point in time, we are breaking out. Daily view. And we do have a Bollinger Band squeeze here on a daily view. It looks as though they're going to rocket to the downside first and then they're going to take it up higher. Let's talk about the indexes for a moment. How much time do we have here? We only have 4 minutes to go. I'm going to blow through these. S&P 500 weekly chart. We're still up on the week. I'm surprised this chart looks this good. Daily view. Clearly stalling out here. We were down on big volume today. Trip Qs, daily view. They're underperforming the S&P 500, and they're hanging on by a very thin thread. And we are short of the Trip Qs. Daily view. Holding on to the 20-period moving average. Take note of momentum. It's really beginning to break down here. Volume today was pretty heavy. We'll skip through a lot of this. Let's just take a look at the semiconductor sector. You got to have the semis, but we don't have the semis. Semis are down nearly 2.5% on the week. Biotechs, they were leading. They're now breaking down. We booked profits here. We're now out. Let's take a look at oil. Weekly chart. Oil is breaking out. So again, this is all implying that we have inflation looking forward. The only thing that's keeping this market up right now is the fact that the Federal Reserve is not threatening any more rate hikes. If at any point they begin to price in rate hikes on that Fed Watch tool I showed you earlier, look out below for this market. It won't be able to take it. And the regional banks, forget about the regional banks. Unless the Federal Reserve supplies a new lending facility, they're done. Gasoline prices, we already went over this, but it's worth revisiting. Up nearly 7% on the week. Gold is now down on the week. I did go adding some call options for a quick swing trade here. I bought when it was getting killed this morning, and I didn't look at it. I just looked away, and I was actually up like $50 by the end of the day. But I think we could still get a breakout here on gold because I think that the markets, they're pricing in a proactive Federal Reserve. The only thing the Federal Reserve is proactive about right now anyway is the fact that they're not going to do anything. They're clearly telling you we're getting ahead of the fact that we're not going to do anything. Not to fight inflation anyway. Gold mining stocks, they're still up on the week. All right, let's do some chart requests, and we will call it a night. We'll be using our friends over at TrendSpider. Folks, they have 35% discount code at a minimum. Use that link below. The best charting software for multi-time frame technical analysis. All right, I need to go to our Slack forum. We got for Donnie, Rig, SOXS, HL, Gay, Baba, Wendy, LAC, XLE, SILJ. We got a lot to go over here. How many times do you think the price hit previous highs? 112. I'll respond to you in the Slack forum on that question, Wendy. Let's, I think I have everyone here. Let me make sure. I think Franklin put some quotes in there. Bear with me, folks. I just got to log into the members area. All right, here we go. Good stuff. Okay, for Jeff Biddy. And ASM for Franklin. All right, let's do it. We got a lot to go over. All right. FCX first up. I'm not sure what's going on here, but it's good stuff. I've been bullish on it. It's broken out on the week. We have a little bit of resistance up here at around 43 bucks a share. I would want to see it close before I initiated a position above 43.52 on the week, daily view. Daily view, you have some fractal resistance up at 44.51. I'd still be a nibbler here on any pullback. If you get a pullback here, I'd be a buyer down here, 42.16 per share, because we may not make it through right away above this resistance level. Let me throw up that weekly resistance for a moment. There you have it. We're above weekly resistance. However, we have daily resistance immediately above. I would be a buyer between 42.80 and 42.16 per share. I'm bullish on it. Rig, oil production rig, in Fuego. I mean, outperforming. We already went over this. Outperforming the S&P 500 on the month. It's broken out on the month so far. On a weekly view, it's broken out on a weekly view. This is a buy. This is just, it's going up. Daily chart, we're going to have some resistance up here. So the strategy for a trade here would be this. Any retracement back down to VWAP, which is at around, wow, this is a $5 stock now? Oh my God. Oh my God. This peaked out in 2008 at 161 a share. I got to buy me some rig. Okay, back to reality. So good breakout here. Any retest back down to 520 or VWAP at 550, I'd be a buyer here. I just like it. I like the sector. Just be aware you have a little bit of resistance above. So any pullback, I would be a buyer. SOXS, that's the short semis leveraged product. Not for the faint of heart. If you don't like volatility, this is not for you. Weekly chart, bullish, holding support, has not made a new weekly lower low. Semis are in trouble. Daily view, they've broken out on a daily time frame. Looks like they want to go up. Bearish on the semis right now. HL, Helka Mining, love mining. I mean, we went over this earlier. Here's the mining sector versus the S&P 500. What do you want to own? Mining stocks or S&P 500? Give me the mining stocks. So Helka Mining, weekly chart, we have resistance immediately above at around 460 per share. I would wait for a close above that mark before I got involved. Daily chart, let's overlay weekly support and or resistance. There it is, right up there. Right around 460 per share. In fact, you have a volume shelf immediately above, right there. 460 is your number. I'd be a buyer above that mark. You have too much overhead supply right now. Let's see if we can get a rally up and through that mark, and especially a close above it. Baba, Chinese stock, hate Chinese stocks, but I love my viewers. Therefore, I will review the Chinese stock request. And it's a basket case, as is China. Bearish key reversal on the week. Look good early on. This is why we wait until the back half of the week. If we're going to put on intermediate to long-term trades, this is not a good-looking chart. One trading day left to go. Tomorrow could be a better day. They tried to hold a breakout. They broke it out back here on the 11th, retest one, held, attempted follow through, failed. We got today. I would avoid this. LAC, I think this is Lattice Semiconductor. No, that's Lithium America. I thought I was cute. I am not cute. I like this quite a bit. You have a Bollinger Band squeeze that is in the process of being set up. Take note of the Bollinger Bands tightening up, very, very, very tight bottleneck. This could get resolved ruthlessly to the upside. Big volume on the week. However, you have some topping action. We are off the highs of the week, daily view. Yeah. So big wick, shadow, topping tail, call it cupcakes. It doesn't matter. There's a lot of sellers above. The market sends us signals, and the signal is avoid right now. Why? Simple. You got sellers here. You got sellers here. You got to get through this resistance level or get a pullback and another running start at those sellers until they're gone. A lot of overhead supply on this stock. XLE. Weekly view, XLE. I still like it. The however is that we have a lot of overhead supply here. We need $90.81. I would be a buyer of XLE. I don't own it. I'd be a buyer and a close above 94.71, or at least until I got to pull the two. Now, if this whole market goes into free fall, all bets are off. So we're trying to be optimistic right now, thinking that this is sector rotation. It may not be. So be careful. If the entire market starts to fall apart, it is what it is. Stand by your stops, raise cash, and watch for a better re-entry point or short the market, whatever you feel comfortable with. Nothing wrong with sitting in cash. Where's my next one? SILJ. Very, very volatile, leverage product. These are silver miners. We have some resistance immediately above right here, $9.50. I would not be a buyer here. I want to say I want to be a buyer. I can't right now because I think the market has this wrong. I think that they are interpreting today's economic data as being one where the Federal Reserve is going to raise interest rates. They're not. There's no indication of it. None. So once they realize the Federal Reserve is not going to do anything, that's going to be enough for inflation to continue up higher. So once they realize that, the dollar weakens up, bonds start to rally, then the silver miners, they can begin rallying up higher. Watch the tips. This trades along with Treasury inflation protected securities. I would avoid right now. Own it. I wouldn't go adding more. BITI. No, spelled that wrong. All right. ProShares Bitcoin Trust. What the hell's going on here? Oh, it's a short. I see. It's short. I was wondering. I thought it was a long ETF. Okay. I'm a buyer. I think that Bitcoin is beginning to top out. And if the equity market rolls over, so does Bitcoin. Now, the caveat there is you still have a lot of ETF inflows into Bitcoin. So to me, to just say that is a very, very bold statement, to be honest with you. RSI 89 on weekly time frame. That can go up higher. We are currently down over 2.25%. I think we're going to roll over here a little bit. So I like Biddy for a trade, not an investment. Too much money going into these Bitcoin ETFs right now. What else do we need here? ASM. This is going to be the last one for tonight. ASM. Oh, look at this one. Avino Silver and Gold Mines. That looks real pretty. Weekly chart. Nice breakout here. Look at the Bollinger Band squeeze. Would I go buying it now? Same thing holds true here. Look at the bearish reversal bar today. Same thing holds here true as to what's true with the gold mining stocks and silver mining stocks. Right now, the perception, I think, is wrong that the Federal Reserve is going to raise interest rates. I see no indication of that. So I think that any pullback here is to be bought. The however is, if the equity markets begin to roll over, everything is going down. Everything will be going down with the exception of possibly bonds and the U.S. dollar, because that's where the money market flows go into. So be careful here. Be very, very careful. I'm predicting that we're going to see sector rotation as our best case. If yields continue up higher, it's going to be a major problem for the overall equity market. So warning flag on the track, folks. So with that, everybody have an awesome night. Thanks for being here, and I'll talk to you soon. Be well.